Hello and welcome to the Core 4 Show. I'm your host, Brandon Adams. This is another week of us learning and earning how we can change our lives financially. A lot of times people are asking me, how are you so consistent? And I have to tell them one of the reasons why I'm consistent now is because I stopped giving my money away to different platforms and different people that really aren't necessarily at the level of professionalism that I'm looking for. And last week, I don't know how many of you guys decided to really take a look at the core four metrics that we use with the core four quadrant, the core four coefficient, the core four true return. But if you really look at what we're telling you to do here, we're not telling you don't put your money with platforms or with people that offer ROIs. What we're saying is that there's an amount of leverage that you want to be able to use whenever you're putting your money anywhere. And so you have to think differently about how you do it. And if you don't think differently, then you're going to get the same results. And unfortunately, those results have not typically worked out for any of us. We have been waiting, for this program to restart and that program. And I did a show with a guy named James Pelton was our guest, and he's a good friend of mine. And he said, hey, even Daisy's gone. And so that wasn't actually accurate. I actually did do a withdrawal from Daisy. So we are going to say something positive about this space. And that was a complete surprise after it went away. But I guess it was just a temporary pause and it hasn't gone away completely. But guess what? If you were to take a look at where it fits on the core four quadrant, you definitely wouldn't have more than 5% of your total funds in. It just doesn't pass the test to be able to get any of your good, hard, quality earned money to be able to do anything with. So remember, core four is about mindset. The next thing core four is about is 9 to 5. How do I change my 9 to 5 experience so that I can spend more time with my family, so I can travel and do the things that I want to do while I'm in this world? Because I'm here to tell you right now from the heart that when you're gone, you are gone. You can't take any of it with you. So you must enjoy and create the memories, because that's more important than anything else. None of this money matters. But what does matter about making the money is the amount of quality memories that you can make with the people that you love and that you choose to be around. And if you don't have capital to do that, then you're limited in resources and you're frustrated. And so you can't really enjoy the time that we have together. And that's the biggest message that I want to get across to everybody is make sure that you understand what your time value is. So yes, you're going to make investments. What kind of investments are you going to make? Just think about it. What are they going to look like? Those investments are going to be what? And if you invest in real estate, that's a hard asset, fantastic. But there's not a lot of inventory. But we have inventory that you can actually keep money in your custody and do some amazing things with. And week after week after week, we're reporting that to you so that you will know exactly what's possible for your bank account at some point. And all it is just about you choosing on whether or not you want to take your financial situation personally as an active investor to the next level with a bit of coaching and a bit of experience from those who've done it before you. Because I'm not giving you guys financial advice. I'm telling you my journey of where my money is in my control 100% of the time. And that's where the power lies. So you can listen. People are telling me all about these projects that are coming out. And, oh, this bot did this. I heard about a bot that was going to start back in November. And it was guaranteed to start in November. Then they pushed it back to December 14th. Then after December 14th, they said it was going to start January 3rd. And so now it's finally out, but it's not even working right. And so now people are backing away from it. And it's because like they're telling you you're holding on to your money, but it's draining and you're losing the money and you go to sleep. It's just not doing what it's supposed to do because the bots are the new rage. So I'm telling you to be careful because there's a better way to change your financial future. The next thing is outside of investments is your retirement. How is your retirement going to take care of you, and what is that allocation? Tell us about your corporate structure. Tell us about your corporate strategy. Because if your corporate strategy doesn't have your assets protected so that it can pass on, just like you heard Christian talk about last week or 2 weeks ago, he talked about succession. That's incredible. And a lot of you guys don't really understand exactly what that means. So take some time out to learn. So we got a fantastic show for you today, and I'm super excited about it. So we're going to go right on in, and we're going to dive into, really the core forecast. And so the core forecast is where you get to learn from Chris Pulver and you get to learn from James Bishop. And what are you really learning? Right now, you're getting familiar with the terminology. But a lot of it is you're also getting an understanding of how the top experts in the world analyze the marketplace. And then you can take a look and see what Chris's success has been from week to week, from month to month, and from year to year. You can also take a look at what James is talking about in terms of how his predictions, based on what historical facts he knows, and then also where current events are, and how he's looking at what should happen in the future based on historical results. And so you use those tools to go back to the people that you do have your money invested with, and it gives you something to talk about. It gives you something to listen to. So without further ado, we're going to bring on Chris Pulver onto the stage. Chris, how you doing, buddy?
I'm doing great, Brandon. Hey, Core 4. Happy Sunday, everybody. What's happening?
You're up.
All right, let me take the screen here. Brandon's got it up and running. So pretty staggering stuff. I start the Core 4 show in my portion with just kind of top 25 broad market, top 25 S&P. So this is the top 25 in the index weighting since this market cap weighted. Performed 5.94% last week versus the broad market at 0.95%. The names I'm going to mention here for the top year-to-date returns are not surprising. NVIDIA, Constellation Energy Corp, Meta, Advanced Micro Devices, Eli Lilly, Uber. We've possibly heard about those in the news. They're crushing it, especially when it comes to NVIDIA and Advanced Micro Devices, SMCI, these crazy, ridiculous stocks. NASDAQ top 25 last week, 5.92 versus 2.04 for the overall index. Top year-to-date, almost the exact same list. NVIDIA, Constellation Energy, Meta, AMD, which is Advanced Micro Devices, and ASML Holdings. Russell, staggering amount. I mean, there's 2,000 small caps. You have to understand, it's top 25 is very concentrated here, but year-to-date returns vary from a variety of therapeutic companies, biotech, biosciences, between 244 and 357% returns year-to-date. Ridiculous. The Nikkei 225 is up 22% year-to-date versus the S&P flying out of the gates at 7.7. This feels like the U.S. is having a melt-up, but the S&P is up 7.7 versus the Nikkei just exploding at 22% year-to-date. So, hear me out, though. Nikkei 225 has been in a 34-year drawdown, so don't get too excited. And also underperformed since the lows in 2009 compared to the U.S. index. Now, this is crazy. Look at my chart. S&P and the NASDAQ and the Dow Jones have been bullish for 16 out of 18 weeks in a row. That is insane. Here's the SPX right here. You have one little dip right at the beginning of the year. You got one little indecision candle a couple weeks ago, and it has just been mostly bullish the entire way. Here's your S&P at the SPY ETF. Here is your DIA. Just the last, actually, I take that back, 15, my fault, 15 of 18 in the Dow. Because there's one little indecision candle there and then two little indecision candles there, but they're red, so technically that's not an up week. And then the Qs, definitely 16 out of 18 with this recent run right here from our big bottom in late October, 1-2 indecision weeks. Now, we're kicking off a new month. We just had March 1st. We have non-farm payroll this Friday. I keep going back to what I've said the last couple of weeks. I've stressed this. I'm seeing overbought conditions. I actually have a position running on the Qs and the SPY right now. I'm taking a bearish play using options that I'm looking for a retracement. I'm looking for at least the bears to take over and try to come back and fill this NVIDIA gap from 2 weeks ago. If that is the case, then we're looking for a decline from roughly, we could drift up a little bit higher before we decline. Maybe it's not non-farm payroll this week. Maybe it's CPI and PPI next week. But my point is, I'm going to turn this into a diagonal spread using options, which means I'm long a put at 439. I'm going to, I'm getting beat on that right now by a little bit, but I only paid about $8 for that debit. If this trade starts to go my way, I'm going to start selling puts shorter term to lower the cost of that debit and hopefully get that cost basis down from an $8 debit to, let's say, 6 or 5. And that means all I need price to do is get to 435 or 434. And this NVIDIA gap is at 433. If we fill the NVIDIA gap, it's 425. So long story short, all that means is hopefully I can turn this into a nice little $10+ win. Contract size between 1 and 50 and 100. So, the numbers add up. Streamwise Capital last month was up about 6%. Year to date, it's up over 10%. So I'm pretty happy with those returns. And I only own one stock. Everything else has been options. So it's a lot of active options, a lot of grinding, a lot of out of the money moves, a lot of selling premiums, trying to win 4 out of 5 ways. So doing my job as I need to. And again, I guess you could say like, oh, you should just be in NVIDIA. Yeah, maybe, but I'm not chasing my tail with momentum. I'm not trying to ride these crazy potential bubbles, because what I see typically is this, a stock like this. Yes, I realize that NVIDIA could be the greatest performer and the greatest things in sliced bread and have the most ridiculous year. But if I don't know how violent and volatile this top can be, I'm not going to get stuck. Now, if I trade NVIDIA, it's going to be with options. I have out of the money bull put spreads right now, so I'm just collecting income month to month. If NVIDIA just continues to set records and break all-time highs week after week or month after month, I'm just going to keep moving this up month after month. And hopefully NVIDIA can make me, 5 or 10% for my portfolio. So, but I don't have to chase it. So there's a lot of ways to get the job done. And, by the way, everyone sees this and gets all excited. And it's just like the news likes to give us FOMO like crazy. But you'd have to be 100% invested in order to get these type of returns, right? So year to date, if I've got a year to date on NVIDIA, I don't even know what it is. I can check it right now. Just give me 30 seconds. Give me Saturdays. Hey, Benji. Oh boy, sorry. My dog.
Yeah.
All right. NVIDIA year to date is up 66%. So everyone's excited thinking like, oh man, if I just put my money in NVIDIA. Yeah, if you want to put 100% of your capital in a stock that is just moving on total hype, there you go. That's NVIDIA. So that's not what I do. That's not how I trade. But it's exciting to watch. And so I go back to this for this week before I wrap up here. 16 out of 18 weeks in a row. That's a lot. I think that the at least a sideways move from here is likely. I mean, I'm not fighting the top. I said a couple weeks ago in the Core 4 show, if we're not breaking this trend line, there's no reason to force the market to short. Now I'm taking a stab at this. If the floor falls out, I'm looking for this NVIDIA gap to fill. If it gets more violent to the downside, that's good for me. Otherwise, I still think it's a buy and dip. We go back to previous all-time highs, get tested, and we'll see where the bulls are really sitting. But it's exciting. I mean, it's a great start to the year. It's probably making investors a lot more happy than they were in 2022 when there was nowhere to hide. So I think it's a great environment. And on top of that, we have gold that made a huge threat last week, where we had this ridiculous day on gold hitting at 2080, just shy of that 2090 handle. I've said this year going into gold that if we break above 2100, I'm pretty bullish, and a break, retest, and a go, staying above this, 2075 level. I think gold is looking to make all-time highs and give us some type of inflation play, something that's anti-dollar. But it's important to watch the close of gold this next week. So Monday to Friday, trading on gold. If it can't close above this current level at 2075, then we could be putting in a near-term top and come back and find some efficiencies. Bitcoin, I'm sure all of you are excited about Bitcoin as well. Flirting with all-time highs. And we're sitting here with highs around 69K. We're trading currently at 63.7. And again, ridiculous move, 25% last week alone. And just since the SEC pullback when we had the ETFs approved, I believe this is over 50+%, right? Yeah, about 64% just in the last month. Staggering stuff. It's impressive. I hope everyone's enjoying the runs on Bitcoin and any crypto related assets. I certainly am, and I'm trading it not just in wallets, but also in stocks and options as well. So we'll see what happens. But again, I'm looking for a pullback. I'm just looking to add on dips. I'd like to find some efficiencies in some of these markets that have run like crazy. Meanwhile, we get the currency side of things. Things are pretty boring. There's not a lot of movement in the currency pairs. Dollar index is still very indecisive. JPX, I think, is Japanese index. Nope. JPYX. There we go. Japanese currency index. I am looking at some futures options around the Japanese yen, not right now, but in the coming probably 12 to 24 months. We'll see if the BOJ piggybacks off of the Fed this year. Maybe it's May, maybe it's June, maybe it's end of the year. But just from a technical standpoint, if I'm in the Japanese yen futures, I'm looking for the JPY to get stronger going into this year at some point. it's the anti-carry trade that Al has to unravel, and eventually it will, and it'll be glorious. But at some point, I'm just going to be careful on that, how I position for it using futures contracts. So, Brandon, that might be my time.
Yep.
Anything else? Any other questions?
No, I mean, you covered Bitcoin, and that was hot. Like, I'm excited about Bitcoin.
Sure.
Like, does Bitcoin go to 100,000?
I think it's very capable of getting there. I mean, this type of run, this type of flow, this type of kind of run we're getting. I mean, what's interesting is since the SEC approved the ETFs, there's been over 300,000 Bitcoin grabbed by those ETFs. So that's a value. I think that's $18.9 billion in inflow with current market value. That has had one of the fastest growths of any ETF. You're not getting that type of ETF flow in S&P or the SPY or the Qs. Not even close. Those are inflows of $2 to $3 to $5 billion. Just the numbers are real. Like, so much is pumped into those at this time, which is certainly driving up price and driving up speculation. And I think the rally kind of fuels itself, and we'll see how crazy it gets. But like I said, if there's any dips and pullbacks prior to the all-time highs, I would love that, because I'd like to see a kind of a healthy trend get checked. But if we break above 68 and blow through it, 100K is certainly in the cards, and I wouldn't be surprised if it doubles from here. I think if we hit 100, 110, 120, and then, of course, just be on the lookout for some crazy overbought technicals where we'll probably have a pullback coming. And just as things get bubbly and euphoric to the upside, they do tend to get a little bit more crash heavy on the downside. So, protect your butts, use trailing stop losses, all that good stuff like you should in trading.
I love it. Thank you, buddy.
All right. Thanks, Brandon.
All right, you guys. James is up. He's going to give us his economic outlook. James, how you doing, sir?
I'm doing great. How about yourself?
I'm about as good as to be expected. I'm looking forward to our later conversation. So,
Absolutely.
right now we get to see you as, super economic man. And let me let you go ahead and do your thing.
That's it. Super economic man. That's going to be my new title in here. So a couple of things. I want to just reiterate a couple of things Chris talked about, right, with NVIDIA as well as Bitcoin. By now, you guys, everybody knows the term parabolic. What that is basically a euphoric, upward, crazy run that has a takeoff, media attention, enthusiasm, greed, delusion, and people don't ever think that it's going to come down. And then there's a slight bump down and then a big bump down. And we've experienced it once, twice, if not three times a trade from that. And the first one in history, just because, heck, I'm a doctor. I'm in a doctorate program, so I do a lot of research. Was the tulip price index back in the 1600s, and finally, it just took somebody to say, "Why are we spending so much money? $200 for one flower? That makes no sense." And then it all came crashing down, and that happens with one small crack in the armor of a company like NVIDIA, and you'll see a major sell-off, profit taking, things like that. The other thing to be aware of is that financial investment firms, hedge funds, financial advisory funds, registered independent advisors, they have certain what are called investment mandates that they have to meet. And they cannot violate their investment mandates to their clients. Otherwise, they're doing their clients a disservice. So let's just use an example that we cannot be 10% invested in any one stock or 10% allocated in any one stock. Well, when a stock goes shooting up like NVIDIA or shooting back up like crypto has done, they're going to pare down their positions, and hopefully there's enough buyers to pull it back up. So you don't want to be caught holding the bag, basically, right? You want to take your bag and deposit it into the bank, because that's where it damn sure belongs. Excuse the French there. But back into the news here as well. One thing that I just wanted to kind of make sure that people are aware of, just because we do Forex as well, prop trading firms. The last week and last couple of weeks, almost pretty much the last month, there's been this kind of ups and downs. What's going on with prop firms? Why have my prop accounts been closed? Why am I not allowed to sign up for them? Basically, the US has reached out to MetaQuotes and said, hey, look, you need to cut this off for all US clients. And MetaQuotes, who does MetaTrader 4, which is the largest servicer of prop accounts, is temporarily stopping prop trading.
Wow.
So if you're a US client, just check your accounts, check your positions, things like that, because we're in this weird limbo. There's no official rule or law or thing like that, but I'm checking the news every single day. I've alerts set up for this just because it affects so many people that I know personally and so many people that I'm associated with through Core 4 as well. And then to touch back on a couple of things economically, this week we have Bank of Japan Governor Ueda speaking. That is on Monday. Now, the Japanese stock market, as Chris said, it literally, it's Monday. It's Monday at 8:50 a.m. over there. It is sitting at right now 40,309. It is again 34-year high. It is the highest that it has ever been in the Nikkei 225, and what goes up must come down. Literally from 2012 to today, we are up over 40,000 points in just their index. Also, additionally, their capital spending. So what that means is companies investing in plants, manufacturing, raw materials, that is up the highest it has been since 2000 since recorded history on that statistic, 2009. It was up 16.4% year on year. And then, so I expect to hear a little bit about that, hear their plans with negative interest rates, because when the yen changes from a negative to a positive interest rate, I think we are going to see massive, massive, massive volumes in the yen crosses. We additionally have Jerome Powell testifying to Congress on Wednesday, March 6th, and then on Friday, we have the big announcement with non-farm payroll. Non-farm payroll, the testimony, unemployment rate, as well as unemployment claims will all factor into what do they do with interest rates. Right now, with inflation still, it is still rising, but not rising at the levels that it was rising at. Will they cut interest rates? Will they hold again? Personally, if you want my personal outlook, this is opinion, not fact. So my personal outlook is that they will hold rates until June, July, after quarterly earnings of the big companies. And then they will look at that. They will also look at inflation. And then we will see probably a very small dip your toe in the water, test it out, a 0.25% cut before a little bit larger cut in, or late this year, early next year. That's just what I personally believe. But that's it for the economics and news that I wanted to make sure that gets shared with everybody here in Core 4.
I love it. All right. Well, I'm going to see you back on the show because this is a big thing we're going to be talking about to help people go into this next quarter starting next month. Hold on one second. I'll see you soon. All right, you guys. So the next thing we always talk about is what is the Core 4 report? Core 4 is about a few things, actually 4 major things. But one of the big things that we want to know is what are the testimonials that Core 4 is getting from the success of some of the things that we're actually promoting. And that's obviously keeping custody of your funds. And so we have our ups and downs with the Forex. So if you're in the Forex groups, and you'll be able to see that for yourself. And that's why we have a subscription service to it. And if you're interested in that subscription service, then you can please just contact us and let us know. And then we'll get you signed up for it. It's a very simple process. And then we'll get you rocking and rolling. Not a big deal. But the next thing that we want to talk about is what we do with binary options and what we do with yield farming. Because with all of the hoopla, and one of my buddies was talking about it today, and he was like, man, if we were doing what you're doing with Core 4 when Novatech was out and when Hyperburst was out, we would be multimillionaires now. And I'm not sure if that's true or not, but I can tell you this, that the amount of money that we would still have in our wallets, number one, or in our bank accounts, and the fact that it would be growing consistently because we have the right education, it's priceless. And so peace of mind, stress, all the rest of that stuff, it just changes everything. So the reality is, and I'm just going to share this with you as I try to do every week. Let me see here. Let me pull this up. And let's see here. So here it is. And Let me see here. I think you guys should be able to see my screen. But for this week, we traded 2 days. And we got 26.6% and we got 17.7. That's a total increase of 44.3%. That's just unheard of. That's a daily average, even though it was twice this week, of 22.5%. That's pretty good. And for all of those that really don't get it, the deal is that let me see here. The deal is that you guys can participate with this, and you guys, what you get is you actually get a course. So it's not like you have to trade with the coach and actually get what the coach is getting at the same exact time. You actually learn the strategies that the coaches are using to be successful. This is a very powerful tool for you guys. So just think about it and think about the success that you can have with it. So we're going to bring on Coach Vaughn, because Coach Vaughn and I have been trading. We've been doing a fantastic job for the last, 3 months now. And we now have a course that you're going to be able to get. And you could just contact me, and I'll let you know what the course is. Coach Vaughn is fantastic with actually getting everybody involved with the course. Coach, how are you doing?
I'm doing good, man. I appreciate that. I just want to take a moment here to just kind of be really serious with you guys. I mean, when I first hooked up with Brandon and had the idea of bringing binary options to the table, um, we did that, and we've been trading consistently and making really large sums of money. I mean, don't let it pass you by when he talks about 20% or 40% or these high percentages that just seem so out of this world. It really can be done, but binary options is a very, very powerful tool. And I like to compare it to like a powerful weapon. A powerful weapon can be the difference between life or death if it's in the hands of a responsible person who's using it for good. But if it goes into the hands of an irresponsible person who doesn't know how to use it, a powerful weapon can be very, very destructive. And just like you can make money with binary options, you can also lose a lot of money. Now, I was really taken by surprise that now we have two binary options coaches, whereas like I was the only one, and then I taught somebody for like one day, right? And then that person took what they knew about the markets, and now they're a binary options coach as well. But what you have to understand is that if you really want to learn this, you have to learn it from somebody who is tried, tested, and tested by the test of time, right? And I've been doing this for years, right? If I can impart that to one of our students who became a coach pretty much overnight for binary options, then why not you as well? I'm giving this course at a special discount for Core 4 for the price of 0.032 BTC. That's the lowest price that I'm going to offer the course for, and only for members of Core 4. So if you want that deal, make sure you get with Brandon. And then you can join me in the mornings, and I will coach you live every morning, Monday through Friday, right? You have the opportunity to do that as well, where we will be implementing every single strategy that I teach in the course, and I'll be showing you how it's done live. So there's a lot of sauce there, guys. There's a lot of potential, right? Don't sell yourself short. Don't go the cheap way out, right? Get it from someone who really knows what they're doing.
Thank you, Coach. It's interesting to see you so focused and serious. Love it. All right, Coach India. Coach India, how are you today?
I'm well. Can you hear me?
Yep.
Good. Good
So,
evening. Go ahead, Brandon.
so I want you guys to know, Coach wasn't able to be on the call last week, but Coach is fantastic, and she actually works with Core 4, and I'm super proud of you and your success. So, how'd you do this week? Did you have a good week?
Yes, yes, thank you. So what I pretty much like, and I'm gonna see if I can show my screen. Let me know if you can see it. 1 second. Can you see it now?
No.
Okay.
It's not coming through.
Okay, what about now?
Let me see here. Yep.
Okay, cool. So this week, pretty much, the account started out at $1,000, so now it's up $121, so around 12%. So every day, I try to basically average anywhere from 2.5 to 3% a day. I use that tactic because I understand that you should have attainable and measurable goals, not only for yourself but for new people that's coming on board. And so that's one of the things that I actually teach in the course, to basically have longevity when you're trading. That's very essential. It's not only just understanding strategy, but also understanding trade management. And so I'm excited. We finished this week with 12%, and next week we're looking to do anywhere from 10 to 12% and finish the month with maybe around 40 to 50%. So yeah, we had a great week.
We had a great week.
Mm-hmm.
I mean, it's just interesting to see all of the success
Mm-hmm.
that binary options has been able to afford for so many people.
Mm-hmm.
And it's a powerful tool. So I'm glad that we have this tool, and I'm glad that we have the empirical results that are showing our success. So great job.
Yep. Thank you, Brandon.
All right. So one more. Now we're going to talk about yield farming. So, this week was a tough week. You guys know, so many of you that we had my mother's funeral this week, and so I haven't been as focused. But what's interesting is that with my yield farming, it's actually gone in my favor, even though I haven't been paying as close of attention to it. So yield farming is a fantastic measure of being able to basically be like the bank, a decent, like the fees that you're making on a daily basis, and it's just phenomenal. So I want to bring on a genius, and Eric Majors, who's a amazing coach. He's been an amazing friend, amazing support system. And so, Coach, how are you doing today? Are you muted out? Yeah, I think you're muted. You got to unmute yourself. We still can't hear you. I don't know. I don't know how you're muted. I can't. It says can't unmute your guest because they chose to mute themselves. So you would have to take the mute off of your screen down at the wherever your thumbnail is.
Okay.
All right.
All right. I had a little technical difficulty
Yeah.
there. I have so many monitors and screens.
That's
And
all
everything.
all
I
right.
actually lost the screen there for a minute.
Look,
So,
so
all right.
let's just take a couple of seconds and tell me, how did you do this week?
This week, I didn't even count it by that. I just was going through my records right now. And I did 14% for the last 28 days. That's what I was just looking up.
That's when it comes to the fact that it's not just much of a set it and forget it, but there's almost like predictable experience that you can have with this yield farming. Am I right about that?
Yeah. And look, I mean, I'm going to be honest with you. I have, my background is in developing trading systems and working for fund managers and everything. And I'll never forget when I was in college, I have a degree in electrical engineering. One of the teachers said, he said, if you're getting a degree in engineering, it means that you're lazy by nature. You don't really want to do, work. You want to build things that'll do the work for you. And I'll never forget that because I found that to be true. I used to make chips for Intel and for Ford Microelectronics. I've done all kinds of wild stuff in engineering. And most of the stuff that I did around programming for hedge funds and things like that I did it so that I wouldn't have to sit in front of a computer all day and trade. And eventually I had my own firm and I was working for funds, and that's kind of been the goal of my whole life. Now I'm 53 years old. I've been trading since I was started trading when I was 18. And my goal has been to develop systems so that I don't have to be in front of my computer all day long.
Well, you
And
certainly have done a great job with this one.
yeah, well, I can't take credit for this because somebody
Right.
else thought of the whole mechanism of liquidity pools. However, it's taken me all these years to be in a position where I pretty much focus on the LP pools right now, because it's not that it blows the performance away of anything that I've done before. It's just the ease of use of it.
Yeah.
Okay. So I'm not as probably as exciting to listen to. I don't have charts to show you in terms of the markets and things like that, because
But it's not
frankly,
necessary. It's not
I,
necessary.
yeah, I mean, for what I do, I'm not trying to. I even have now. What I am doing in my course, okay, is that I am introducing a lot of automation tools to make this even easier. I mean, I'm not kidding. I spent probably a total of. I've been busy the last week.
Yeah.
I made some
Yeah.
videos and stuff. I probably spent about a total of 45 minutes for the whole last week. And that was my trading week. And during that time, I must have made at least 4%, because I didn't because when I left before that trip, I wasn't up where I am now, which is looking at close to 14%. So now there are strategies and there's ways and means, and I have to go out and pick the pools, and I do all that work for everybody who's in the course. I'm getting ready to add in some even things that are going to make it easier for people. If you can believe it, it's already pretty simple as far as I'm concerned.
No, and I'm gonna tell you the beauty behind what it is that you're doing is that you've set it up so that, really within the first day, you could set yourself up to start making money.
Yeah,
So,
I didn't want to make my course. I didn't want to make it complicated. I don't have a lot of patience anymore. I want to be able to get into things quickly, and that's how I want to design my course, so that people can, within that first day, whatever your skill level is. If you never heard of cryptocurrency before, you could take the intro course, and that I only made that. So I think it's about 2.5 hours, and it's a step-by-step thing. I'm literally showing you in video, do this, do
yep,
this, do this.
yep.
Here's why. And then you go over to liquidity pool, same thing. Do this, do this, do this. Here's why. And
Well,
all. Go
well,
ahead.
one of the things that, and we need to talk about this because we have our guest coming on in just a second. But one of the things we need to talk about is the long-term strategy, because I'm not sure if this is an investment or a retirement yet. Like, you can actually set this up, and if you do this for like 5 years, I can't even imagine the amount of growth that you would have. But we
Yeah.
don't want to get into that. I don't want to get into what we'll do a show just with you on for as a guest. So I
Yep.
just want to say thank you, Eric, and we'll see you next week. This is great for people to get to know you. And that's what we want. We want authentic, transparent relationships with our community and our members. Thank you for everything. All right, so now it's game time, where we're going to actually bring on the same gentleman he just said it, he's getting his doctorate. He is super smart. He is like just listening to him and learning from him has been fantastic, because he's actually younger than me. I know you guys can't believe that anybody could be younger than me, but we're going to bring on James Bishop, my buddy and my friend, and somebody that I listen to wholeheartedly. When you talk, I listen. How you doing again? Things
I'm
okay?
doing fantastic. Absolutely. If I was doing any better, people think I was on something.
There you go. There you go. Well, you're on life, and I'm glad you're here. So I want to dive right in. And, this insurance piece is critical for everyone. We avoid it because we don't want to deal with the inevitable, right? Like, we all know that there's an expiration. And so when we start thinking about our loved ones and how we want to handle that, it's somewhat either depressing, or it's something that we want to kick the can down the road a little bit before we actually deal with it, and then it gets to be too late. And so I want everybody to hear from you that the sooner you do this, and the sooner you accept, like, you just need to grow up, right? And I'm saying this from my own personal experience, because of what I have as my family, right? And what you have as your family. We need to grow up, and we need to start thinking about our future. But one of the things, James, that you and I talk about all the time is how you can use your insurance as an investment tool. It does not have to look like it's just a death benefit for my beneficiaries. Can you talk a little bit about that?
Absolutely. So there's a multitude of types of insurance out there. There's term life insurance, whole life insurance, universal life insurance, index universal life insurance, variable life insurance, and each type of insurance has its own purpose, if you will, and some have evolved. And the reason why some of the older ones are still around is because there's some older people in the industry that they don't want to learn about the new things and how these new things work and benefit. Now, I'm going to tell a story. I am going to mention a former president's name. If you get offended, I'm sorry. These are just the cold, hard facts. It just is what it is. And I know today politics is a very sensitive issue, but so when former President Trump ran the first time when he was competing against John McCain for the Republican National Convention, I'll never forget the story I read, and I was like, this is shocking, which was that banks would not lend to him because his businesses have filed Chapter 11 so many times. So he was known as a risk. And then the very next week, he bought what I feel is probably the second greatest piece of property on the entire earth for golf, which was called Turnberry, and it's in the United Kingdom. And he paid just under $500 million for this. And I said, wait a minute now. You don't just have $500 million. You're not just writing a check. You don't get a big check like Publishing Clearinghouse and go to them with that. Like, how does that hat work? And so I started investigating, and I found this thing called Index Universal Life Insurance.
Okay.
I found out that he had 3 policies for $750 million. Now, this is what's really amazing about this stuff. And, I'm not sure if I can share my screen or not.
Yeah, just go ahead and load it up, and then we'll see if I can cue it in.
Yep. Okay, so turn that on. Sorry, Macs have all these extra features to them. So let me see here. All right, perfect. So these are the investment strategies that I use. There are other investment strategies, but the reason why I use these is I want you to imagine for a second investing in the market and then never being able to lose your money that's invested in the market. That's what's called this right here, which is the floor rate. And I'll use a brighter color to highlight it a little bit better. The floor rate here. Now, I personally select these because I only like working with these funds, and I'll show you a couple of reasons why. But the reason why, what a floor rate is it looks at, I'll explain it really simple, really, really simple. Don't need to get technical. Imagine investing $100,000 in 1 year. The market goes up by 10%, let's say. So now you have $110,000. The next year, the market falls by 30%. You still have $110,000.
Mm-hmm.
And that is because your money is insured against loss. Now, the next reason why I use these particular funds, and I'll show you the exact 4 I typically put clients in, these 4 right here, 13% a year, historical average, 14% a year, 16% a year, 17% a year. Now, those are the historical average returns for these funds. They're JP Morgan funds, BNP Paribas funds, and they're invested across various asset classes and various sectors of the S&P 500. So you're getting a return. And that is very important because what that allows you to do is have exponential growth without the fear of loss. Now, I'm going to show you 2 really cool things. I just got to scroll through all this detail here. And let me see here. And okay, perfect. So what I did was I just built this really, really quickly, just as a demonstration. But imagine a person is 38 years old. They put in $1,000 a month, right, or $12,000 a year, and they have $500,000 worth of life insurance. Now, this is an insurance product. There is a death benefit that will be paid out. We are all going to pass away one time at one point in time, and life is the shortest part of living, if you think about it, right? But you're far along past away and living from the beyond than you are on this earth, but you affect those people forever that you leave behind.
Yeah.
And, I made this joke with a friend of mine and said, actually a person that I recently helped out with getting one of these policies. I said, look, we looked at life insurance. I said, look at that. You got just enough life insurance to piss everybody off that you died. Because you ain't going to have, everybody's going to be mad that all you had was this. That's what little you thought of us, right? And so I just put this together again, 500,000. This isn't a ton here, but what's amazing about it is that when we fast forward, here we go. When we fast forward to what the returns generate, so in year 10, you have $127,000 in return, and your death benefit is now $628,000.
Oh, it moves up.
You can borrow the money out of this at 0.0%, which I'm pretty sure is the lowest interest rate you'll ever get from any bank or anywhere, anytime after year 10. And then think about this. All you have to do is take that cash and put it in an investment that's going to yield you more return than your interest rate. And then you can monthly just pay it back over time. Technically speaking, I don't want to get into this because it takes a lot of demonstration. Technically, you don't ever have to pay it back because your death benefit will pay it back for you. But if we fast forward this person to 65 years old, they will have $1.2 million in retirement that they will be able to draw a tax-free income from for the next however many years that they want to. $1.2 million investing $1,000 a month. That's the goal of anybody, right? Is to, things are going to cost more and they will continue to cost more. Now, if you continue to leave it in here, right? Let's say you decide, hey, look, I'm not going to withdraw this till I'm 75. You'll have $1.26 million in cash and a $1.3 million in life insurance benefit. And it's just, and these returns, so legally, I can only show you guys 6% return. That's what the federal government mandates. But we know that what I have is 13 and 16%. Now, and again, at no point in time can you lose this because every single month you make a deposit, that starts your new floor. So every single month, your floor is changing. So as the stock market is rallying up, you're locking in profits every single month. And that's what the goal is with this, with utilizing this.
So, this is so fascinating. So let's talk about like education before we go into like investments that you can, take out of this. But let's talk about like 529 versus this. Like this just seems like it would make so much more sense.
Yeah, absolutely. 529 savings plan. There's so many acronyms. That's for college education, right? For kids. Yep. So 529 savings plan, they're great. 100%. I'm not going to knock them, but here's the fact. They don't grow as large as this would. And let's say, I'll give you a great real life example, my family example. Both my brothers go to a military academy. And my parents had put money in a 529 savings plan for them. Now that money just sits there and they have to use it for some sort of educational purpose and they can give it to them. But when they give it to them, they have to pay taxes on it. So now it's just like my dad's kind of upset about that. And we're looking at putting it into a retirement in actually one of these for them because they, so what happens if your kid gets a scholarship? What happens if your kid gets into a military academy and their school's paid for? Or maybe, we live in a world where who knows if they're going to even need to go to school to become, that right. engineer or whatever it may be. So there's risk involved with that. This grows at a higher rate and they can borrow that money out, pay for school. And you, again, don't have to pay it back. But you could open this up in your kid's name, and then when they go to school, they have it for themselves, and they'll have this retirement account forever. And if they have that college plan or college paid for program, by military academy or scholarship, then they'll just have an investment account that is setting them up for retirement. So that way, when they graduate, they take over contribution to this.
So thank you. So what I'm hearing you say is that if I started out with a 529 and I started out with one of your products, not only would I not be paying taxes on it, but my account would still be growing at the same time. Whereas with the 529, I'd be drawing down on that account and that money would be gone forever.
Correct.
Yeah. So this just makes more sense. So if you have a baby, then what is the amount of a policy that you would want to open up with, a newborn? Like what would be the smallest policy that somebody could get?
Well, that's the beauty, is that there is no minimum, there is no maximum. For one of the things that I just kind of use as a base guideline is somewhere for, if it was a newborn, I'd look at like $250,000 of life insurance and maybe $150 a month, right? If you ran something like that, by the time they go to college, there'll be over $400,000 or $500,000 in just cash value that they'll be able to pull out. Over
50 a month.
150 a month. Like, it's literally, it could be even less technically. And we can run that, and I can show people, that in appointments or whatever they need. They go through you and then just send them over to me, Brandon, and I'll set them up. You know how I treat clients.
Well, I do. And you do an excellent job, but I don't think that people are really getting it. Like, so you mean to tell me that I can get a $250,000 policy for my 2-year-old and I might be paying less than $100 a month?
Yes.
You need to see me about that. I didn't even know about that. So we got to get that done. And here's what's important for people to recognize is that you can also use this as an investment tool. And so what is the amount of money that you could take out of the universal index life policy, once you get it started? Because I know you talked about Donald Trump. What can you take out? I know you said something about 10 years, but what could you take out if I put in a cash value of, say, $10,000? How much of that is available for me to take out of the $10,000 that I put in while the policy is still growing?
Absolutely. So there is a cost of insurance, and this is why there's 2 areas in this top area. So these first 10 years, the interest rate is at 0.9%. Okay. But what's great about this is when you're paying that interest rate, that 0.9%, that goes back into your cash value. If you're not paying the insurance company, no one's benefiting off that but you. You're the bank in this situation. Okay. Yep. Then anything after 10 years, that is at 0.0%. And that is because in the first 10 years, you are funding the initial life insurance, okay, the $500,000 in this example of life insurance. So putting in $12,000, you've accumulated $9,683, and you can borrow out that accumulated value.
100% of the accumulated value?
Correct. 100% of the accumulated value.
After how long?
After day 1, month 1. Like whenever that insurance, whatever's, I would say after the first year. I would never tell somebody to borrow it, unless they're funding with a large amount and doing like a yearly deposit. So you could borrow it out whenever you want it, really.
So you can borrow up to 100% of what's in there. Yes. And pay 0.9% annually. Yes. So correct. If I borrow $10,000, then I'm going to pay, what is that, $90 a year for the use of the money? And then that 90 actually goes back into my account.
Yep.
So I'll have all that. That's fascinating. Yep. And so what happens if I don't pay that back?
So what happens if you don't pay that back is, let's say, 2 things happen. Either A, so when you borrow that money out, again, remember, it's a loan. So that means that the investment is still there, right? You just borrowed against that investment. So the cash is still in your account. And what that cash is doing is it's growing as well.
Right.
So as you're gaining returns, so let's say it's 13% a year, just hypothetically, 15% a year. So every year it's gaining 15% and it's paying you more money into your account, which is paying back that loan that you had. But where it really happens is, let's just make it simple. Let's say you had a $500,000 policy, you borrowed out 10 grand, you passed away. The death benefit would now be 490,000. It would pay back the loan, and then what's left over, you get.
I mean, you're talking about a whole different way of doing business. And when you set yourself up right, and what I love is the fact that you have the expertise as a subject matter expert on the economic side, but then now you bring that information, that talent of knowledge, you bring that over to the insurance side, and you can help people navigate and strategize responsibly. And so now you have somebody that's not reckless, but you have somebody that actually can, take themselves to a higher level.
Yep.
So,
Absolutely.
I think we need to dive in deeper, and we'll do this. I know you talked about doing the webinar, and so that way people can actually see what you do. So we'll talk about a day, and I'll start announcing it, and we'll start putting it in the description so people can actually understand it and see it. But if people are not, you guys as a community, you guys have got to understand that what James is sharing with you, he's not just a part-time insurance agent, right? This is what he does full-time. He's getting his doctorate in this because he wants to have subject matter expertise to be able to offer you like incredible scenarios. And just to see how successful he is at doing this and the type of clientele he has, it's just outstanding. It's not like it's all about being a who's who on his list, but you have some of the top people in the country are seeking him out to be able to understand his strategies. And he's using those strategies, just like you talked about, something from the 1600s. You're bringing information and education to people that's actually relevant that they might not have thought of because they didn't have enough historical relevance, just like you would with a lawyer, being able to cite cases from, 40, 50, 60 years ago that actually shows relevancy now. And so that's what I appreciate about our relationship to the Core 4 community. And so if you guys want to learn more, James is willing to actually help you to evaluate your insurance plan and then offer coaching to whoever you have. Like, that's the benefit of having this as a team. And if you want to work with them, like I tell everybody, I'm a subject matter expert at teaching basketball. And I tell everybody, listen, I'll talk to whoever your coach is because I know that I know more than them. That's just it. And so there's no intimidation, there's no issues, there's no problems. And so I appreciate the fact that you're willing to do the same stuff, James. And so we're going to work on making sure that people know that you're going to have this webinar and it's going to be available to them. So thank you for being on the show as, number one, you're basically a co-host, but thank you for being a guest and a wonderful one at that.
Absolutely. I appreciate it, Brandon. And anytime, anybody needs anything, if they reach out to you, you'll pass them over to me and I'll help anybody, anybody.
All right, great. Thank you, buddy. All right, guys. So we're going to wrap up the Core 4 show for the week. Just really quickly, I want to share with you guys that we're having our event June 28th to June 30th. It's a Friday, Saturday, Sunday. Please get your tickets. It's only going to be 100 people. That's it. It's just about having a community that's together. And we're going to be talking. We're going to be working together. We're going to be giving examples of the success, doing binary options, doing so many different things. And you're going to have the team there. You're going to be able to meet with them. You're going to be able to sit with them. You're going to be able to talk with them about what your needs are. And then also, if you want to be a part of the pre-launch, it's only $50 to be a part of the pre-launch. It's one time. And then you're building with a community of people that are looking to just have a transparent relationship with you, where we're learning together, we're earning together, and we're growing together. So on behalf of everybody at Core 4, I love you whether you like it or not. Thank you so much for your support, and we'll see you next week. Bye now.